But you've always been an admirer of great businesses. These are, I think you'd agree, these are among the greatest publicly traded companies we've ever seen in America. These are companies that, yes, they have trillion-dollar market caps and they're not cheap.
Right.
But these are companies with 30 and 40% profit margins, 20% revenue growth,
Yep.
year after year after year.
Yep.
Surely you must be impressed by these companies.
Yeah. Facebook or Meta is an incredible company.
Yeah.
Microsoft's a great company. Google's a great company. Amazon is a staggering company. I'm a little vague on Tesla, but this BYD's making a car now in Hungary. It's a third of the price and a good car. I mean, I can't get this humanoid thing about, but every employee at Fidelity, we call in at 10:15 and say, I'd like to buy these 3 stocks, sell these 3 stocks, and they say, nope, can't do it. Fidelity's buying or selling. Every employee does that. So I don't have a chance of buying Meta or Amazon because Fidelity's buying, but that's fair.
You could buy the Fidelity Spartan Index Fund if you want exposure to those.
I own a lot of Fidelity funds.
Yeah. One of the concerns that probably a lot of people in the audience have right now, large cap stocks in general are selling at some of the highest multiples we've ever seen.
Yep.
Historically high, not the highest ever, but in the decile, let's say.
Yep.
So we're selling currently S&P 500, 22 times trailing 12 months earnings. Granted, earnings are growing, interest rates are falling. It sort of makes sense when you think about this being
Right.
A CapEx boom and low unemployment. There are a lot of justifiable reasons for it. Do you worry about future returns for the investor who puts $1 to work today in the market?
I'll ask somebody in the room, do we run Costco's IRA or Walmart's IRA? Because Costco's like at 55 times earnings.
Costco has an AI stock multiple, but they sell paper towels.
It's a great company, but
Yeah.
55 times earnings. Ooh. Or Walmart is 70 years old. You know, Sam Walton was at JCPenney, been this great formula, went to small towns. Imagine, here's an example of being, sometimes you don't have to be in the first inning. Walmart comes public. You said, gee, it's a little town in Southwest and Southeast. Not sure about them. So 10 years after they went public, the stock's up tenfold. It's gone up tenfold. I missed it. It's now up 80-fold since then. These 10 years, they're a 25-year-old company.
Yeah.
And they copied the Kmart formula. They're lower cost. They went to the big cities. They could kill Kmart, kill Sears. So it went up 80-fold after going up tenfold. Because it's a 25-year-old company, 10 years in public. They're in 18% of the United States. Then they went to 19, then to 20, then to 23.
Yeah.
And and then they had Sam's Club. And I had the same example with McDonald's. McDonald's was my biggest position. People said, it's all over for McDonald's. I said, well, wait a second. Why is that? I said, well, how many more McDonald's can I have? Well, I think they can do really well in Europe. There's 450 McDonald's in France.
Yeah.
In France. Germany, 380. There's over 300 in England. There's 300 in Spain. There's more McDonald's outside the United States. So McDonald's went up tenfold after that. People said, McDonald's is done. They didn't think it through.
Is the message to that the fact that a stock has already been successful tells you nothing about how much more successful it could be in the future?
No, the facts were at that point, they had 20 stores in France on their way to 400. They had 20 in Germany. They had 20 in Spain. This was not an idea. They were doing it.
Yeah.
And people were lining up to buy a Big Mac everywhere.
I wanted to ask you, in the time that we have remaining, a couple of other things about the modern market, just so we could all get your take on them. And if you have no opinion, that's okay too. In the last week, the SEC has said they would study an idea proposed by President Trump to ease up on the quarterly reporting burden for public companies and allow companies to report earnings on a semi-annual basis, which is how they do it in the UK. Do you have an opinion, not a political opinion, but do you have an opinion on what that means for investors or whether or not that's something we should celebrate or have cause for concern? Is that something that you think
I
about?
haven't really devoted a lot of attention to that, but I think 3 months is a very short period,
Yeah,
a very short period. And you measured with it. And maybe the year before was very strong. So you're up against a strong, so there's some merit to having a longer period to see what's really happened in the company than just 3 months. So I have not made a decision on that one.
I wanted to ask you about the meme stock phenomenon that took place during the pandemic. From my perspective, and I'd love to hear if you agree with me or not, from my perspective, obviously there were some elements of that were reckless, but the byproduct is we got 25 or 30 million people to open their first brokerage account, mostly people under the age of 30, where the prior generation was very slow to embrace stocks. So I sort of looked at it like it had a silver lining.
Yeah.
Would you agree with that, or do you have a different take?
The market bottom in 82 was 777,
Yeah,
not 7,000, 777.
the Dow.
Dow.
Yeah,
So we've had an incredible bull market since 82. We've had, 10 or 12 declines, but maybe a few more. So people today, they're not used to, everybody I knew grew up, they were warned, the big one's coming. We've had 11 recessions in World War II. We've never had a big one.
yeah,
But imagine in the Depression, we didn't have Social Security. There wasn't Social Security. What an incredible invention. People, when they retired, they get older, they moved in with their family. The family had to cut back on their spending.
Yeah.
We didn't have unemployment compensation. We didn't have the SEC. The SEC did not exist.
yeah.
Did not exist. There's so many things that are better, and we had a Federal Reserve that was asleep to move. So I think there was a lot of things that, there's margin requirements now. I mean, this 1929, no one jumped out of windows.
That was fabricated, you said.
1% of Americans own stocks in 1929.
I don't think a lot of people understand that.
Yep.
The losses were very contained to a small group of people.
But we had an incredible depression.
Yeah,
30% of people out of work, not enough food, trouble farming environment. It was awful. And people went through that. I've read stories about it. It was grim.
you think we have evolved the economy and the markets to the point where it would be very difficult to repeat the quote-unquote big one?
Well, we've had 11 tests,
11 recessions since.
and no one's ever got worse than 5-6% decline in GDP. There's a lot of cushions now.
Yeah.
63% of Americans own their house. That was not true in the 1920s. People have IRAs that if they're Fidelity, they're not going to panic. People are careful with their savings. The GI Bill allowed people to buy houses, with 5% down, create a lot of people with wealth. Most wealth in America is in their house.
Yeah.
And that was not true in the 20s. People were renting, rent went up. There's so many buffers now that, it's incredible how many positives there are. We had a lot of tests. We had many opportunities to have a big one. And we've had some incredibly bad presidents, some bad Congresses. We've had bad economists, and we've made it through. It's a pretty good system.